following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly choice for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from the Options Insider Radio Network, upon which many of you are listening to this fine program as we speak. And joining me on the old all-star panel today, we have the usual cast of characters, minus one who's probably going to be joining us a little bit later. He's getting too big for his britches these days. Can't join us on time. So we'll start off with the folks who can make it. This is, of course, starting off in order of proximity with the man of many hats, a.k.a. the Viceroy, a.k.a. Alex Jacobson from Options Express. Mr. Alex Jacobson, welcome back to the program, sir.
Hey, Mark. Good to be here today.
All right, and also joining us, beaming in from the great state, nay principality, nay duchy of Maine, none other than the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, sir.
Always good to be here on the Option Block, my favorite option radio program, if you can believe that. I know it's tough, but it's my favorite option radio program.
You know, it helps that you're on it, too, so that certainly does.
That does something to it. No, I'm not quite sure what it is, but it does something.
You seem to have cemented your space here on the Option Block. Mr. Sebastian has kind of been pushed aside to Vol Views, which is, of course, no ghetto by any means, and also to the Advisors Option program that we do. So you Option Pit boys getting your tendrils into everything here.
Yeah, I don't know. I don't know why.
Neither do I. It just kind of happened. But yeah, of course, speaking of Vol Views, we did relaunch Vol Views on Monday, actually. A lot of you guys checked it out. A lot of you guys writing in, really excited about that show is back. We're really excited to have it back as well, hoping to make it a full-time regular part of the schedule. Again, that is the plan, at least going forward. We got some new partners on board to help that show come to fruition. So we're really excited that Vol Views is back in the fold. So if you haven't checked it out, listeners, or if you haven't tuned in a while because it's been on hiatus, check it out, theoptionsinsider.com/volatilityviews, or find it in iTunes, Stitcher, Aha Mobile, wherever you find our fine programs. And now, with the clock ticking, we're going to keep on rolling right on into our first segment, the Trading Block.
The Trading Block.
All right, and welcome to the Trading Block. This is, of course, the portion of the program where we break down the day's worth of action and the activity that was lighting up the old tape today. And this is one of those days I like because I have so many things going on over here at Insider on a given day that I had some time to put these show notes together a little early before I had to head out to do some meetings. And luckily today, the narrative didn't shift all too much towards the end of the day. Sometimes I'll write these things up at around noon Central, and by the time we actually record the show is sold off 3%, or the markets have sold off 3% or something crazy. Today was not the case. It was pretty much unched this morning, and we closed essentially unched as well. S&P down 1/10 of a point. NASDAQ up 1/10 of a point. I think you know where I'm going with this. VIX cash getting a little bit of an upwind and updraft there, closing up about 0.22 on the day to 12.5 exactly on the day. So perhaps we'll start there. Senior Andrew, as we are wont to do in the volatility space. Anything really catch your eye in today's VIX movement, VIX activity, VIX trading that maybe seemed a wee bit outside the norm?
I just want to say volatility views. That weird soundtrack. I kind of liked it, though.
That's part of the charm of that show. That's part of the charm of that show.
At hand. You know what? I think this mostly it is the kind of the weekend effect. The market, it's sold off a little bit, a little weaker. Obviously, hitting a record high yesterday, so life couldn't be too bad. Tends to drive VIX down. Yesterday, VIX slightly up, and vol futures up. Today, vol futures up. So I think mostly just there's been a huge compression in premium in these really near-term cycles because of the 3-day weekend. So you're pretty much going to buy a weekend for free tomorrow, I believe. You're going to have a 3-day weekend for free. There's been so much compression. But the futures are going to stay a little elevated, thinking that, VIX gets remarked at some level. Now, what happens on Tuesday with volatility, who knows? But that's what we have. It's actually kind of just a funky mechanical effect around VIX expiration. You've got the Jan future going off on Wednesday. It'll expire, and the Feb future rolls into the front month. And there's, a good bit of roll yield in there. So nothing. I'd say there was no unordinary activity save for basically the huge short-term compression and volatility from the holiday.
Yeah, you're talking heresy, sir. Buying weekends. You sell weekends. That's what our listeners do. They don't buy weekends.
You sold it Monday.
Yeah, exactly.
You made some money.
Yeah, hopefully you sold it already.
Don't sell it on Friday.
We beat this horse every now and then on the show. I think we're going to beat it again today. That if you're selling your 3-day weekends into the tail end of Thursday or going into Friday morning, you've probably missed that horse. That horse is well out of the barn, and you're selling into Tuesday levels at that point, if not beyond. So be cognizant of what you're doing out there. Be cognizant of your levels. I know we say that a lot, but we're going to say that again because it is important. No reason to give away a whole weekend's worth of risk for free because that's exactly what you're doing. And we've seen myriad examples over the past couple of years of all the different things that could happen over the course of a weekend that could really put a dent in your portfolio. So if anything, take a free weekend. Go buy something. Put it on for the weekend. You hedge yourself for the weekend. Nothing happens on the weekend. You sell it on Tuesday.
Buy lobsters from the state of Maine. Don't get those junky lobsters from anywhere else. Buy a Maine lobster with all that extra money.
There you go.
Yeah.
Don't buy anything exactly and just load up on Maine lobster. Not too perishable, those. They have a good shelf life. Not too high in the theta for the lobster, so you can hold them for years.
About 24 hours, although next time I go to Chicago, I think I'm going to bring some with me.
That might be an interesting new realm of study, fish decay, fish theta. This is a high theta fish. I want to eat this right away. This is kind of a low theta fish. I can store it for a couple of days. Might be some interesting research to be done there. I'll have to make a note.
I think isn't that Vietnam? They made a whole industry of that. They have fish sauce. They have the Nuc Mom, that great tangy fish sauce.
There we go, listeners. You learn something every day here.
Something totally useless if you need it, right here on the Option Etc.
On the Option Block. Speaking of learning something interesting, we're talking here about VIX. I was chatting with our friends over at the SIBO earlier this week. They had their big annual gathering here they do at the beginning of every year, kind of giving us an update on what they have cooking in their respective necks of the woods. And they kept reiterating that they're looking for a Feb approval here for the VX XT, the short term. So that'll be interesting if they can get that up and running. Futures first, obviously, options a couple weeks later. So they can get that up and running, by February. That'll be kind of cool. And we can actually start seeing, because look at this last sell-off we saw last week. We saw regular VIX It had a bit of a pop. VXXT, at least the disseminated values of it so far, I think it popped like 31%. So I mean, a lot more bang for your buck, a lot more vol in that very, very near term of the volatility curve, particularly with so much action these days being focused on the weeklies. It just is a no-brainer to have a short-term vol product as well that goes along with it. Are you excited about that launch there, Andrew?
Yes, that could be an insane. It'll take a while for people to understand it because people are still trying to understand VIX, but you could see that product really, really, really move. You can see the intraday swings nuts on that thing. I know you said that, but I can't help it. I'll say it again. I'm going to reiterate your correctness.
What we often do here on this show. But yes, that will be an interesting one to watch. Hopefully all those ducks line up for that one. I don't want to jump in too much vol views discussion. We can save a lot of that for tomorrow, but I thought it was interesting. A lot of our listeners, of course, looking forward to that. They're also talking about maybe they've had some success with their extended hours trading over there, getting about 6 or 7% of at least the futures volume in those extended hours coming. So they're looking to maybe applying that to the options on both VIX and SPX sometimes in 2014 as well. So maybe we'll see extended hours SPX, extended hours VIX. It might be kind of interesting. So a lot of our vol traders out in the audience and a lot of our size S&P traders might have a little bit more skin in the game. Of course, they may dread that too. They may not like having to be chained to their trading screens for 23 3/4 hours of the day. We'll see how that unfolds. But interestingly enough, good stuff going on over there. Speaking of good stuff going on, Mr. Jacobson, I alluded to it at the top of the show, but it seems like you guys at Schwab are doing a wee bit of celebrating today.
Yeah, our executive council is in, and that's all the senior management in from San Francisco. And our earnings were unexpectedly good today. We surprised to the upside. Now, I can't say a lot more about earnings other than the fact that we surprised to the upside. But we were firing on all cylinders last year, and the firm had a very, very good year. And as I said, not only were we firing on all cylinders, but long rates ticked up last year, and that's a real important component in the discount brokerage community. In fact, I know every time I say this, I get lots of email from people, but you don't make as much money trading as a brokerage house as one might expect. The discount brokerage model and actually the national wirehouse model makes a lot of money from interest rate spreads, makes a great deal of money, and this is something I think that our listeners would benefit if they understood better, but make a lot of money from short stock rebates. And I guess the only time people really look at that is when you're in a hard-to-borrow stock and you've got to pay to borrow it. But it was nice to have our executive council in, and candidly, they were congratulating us on having a great year. And we are going to port Idea Hub over to the Schwab mobile platform in the very near future. So I was in a bunch of meetings today, but there were refreshments in all the meetings. So to me, that makes a good meeting, and all the news was good. So it was a good day and a fun day over here.
Hopefully they peppered some of those meetings with a little bit of bubbly to celebrate over there at Schwab. You know, it's kind of funny. We're always talking here about different names underperforming, overperforming from a vol perspective, from an option perspective. It seems kind of fitting that an options house like Schwab would your straddle went out yesterday. That 26 straddle went out at 77 cents yesterday, Alex, and you moved it today 77 cents exactly. So you guys performing exactly to a T. I would expect nothing less from a house like Schwab.
Well, that tells you how robust our direct line is to kind of I'm thinking of a nice way to say this without mentioning the Vatican or Jerusalem, but just tells you the influence we have.
Yeah, you guys can make the stock march to your own, the beat of your own drummer when need to. Speaking, of course, on the other side of that coin now, you guys at Schwab having a nice party over there with some bubbly and some fine snacks for Mr. Jacobson. People not exactly celebrating today. Best Buy taking it on the chin today. We alluded to back in the Black Friday realm, some of us had spent some time looking at different stores and saying, wow, there weren't too many crowds out there, particularly at the Best Buy. I swung by a Best Buy on that day just to kind of check it out and see. And that's when I've seen in years past around that time of year having, hour-long checkout waits. And you could walk out and check out in 5 minutes at that one. So that certainly anecdotally didn't bode well for Best Buy. And today they confirmed that, taking it on the chin, closing today at $26.83, down nearly 11 handles or nearly 30% on the day. So just taking a beating off of a really, really bad Black Friday, putting even more question to the notion of brick and mortar electronics retail really getting to be a dubious business. Unless you're Apple, I guess. No one else has really figured out a way to make it work. Alex, I'm guessing, aside from all the bubbly drinking and champagne popping over there was a lot of action on BBY over on the OX platform.
Yeah, there were actually 3 names today that were just lighting it up all day long. And I had an email from Grigas early this morning about how they were just Best Buy had the phones ringing off the hook. New Skin had the phones ringing off the hook, and Herbalife. Just 3 names that kept us busy, both over the phones and electronically today. And all 3 had really rough days.
Yeah, New Skin also off about 27% or about 30 handles today to $84.80. And Herbalife, just the name that keeps on giving from an options perspective, off about 10% or 7 3/4 handles to 71.63. Just a whopping day for a lot of names. You guys faring well so far early in the earnings season. Of course, we are very early on in the earnings season. Still a long way to go before we have the narrative of this earnings season down to a science. There was some other good news today. Everyone's favorite childhood arcade company or manufacturer, store, etc., Chuck E. Cheese, getting gobbled up for about $1 billion. You think all that real estate alone would be worth about $1 billion, but apparently not. It's worth about exactly $1 billion. So I guess the IP that goes along with it and that big furry rat not exactly counting for much. Still, I guess they were happy with it, taking about $1 billion off the table. Is that one of your primary holdings there, Mr. Andrew, Chuck E. Cheese?
It is one of my favorite stocks. Actually, they're not a sponsor of the show, right? Yeah, those
no, otherwise we'd all be having free pizza every episode.
Those things freak me out. I think I went once about 9 years ago, and that's it. I'm done. I've had my Chuck E. Cheese experience.
Andrew, how old are your kids?
6, 8, and 10.
Yeah, well, you're not past the cycle yet. Do they have stores in Maine?
They do, but there is a strict moratorium on Chuck E. Cheese, as in we ain't going.
When your kids are between 6 and 10, at least in the Chicago area, about the 3rd birthday party at Chuck E. Cheese, you develop some cute, horrible acronym for them. So, Mark, you know what you have to look forward to.
Yeah, we're on the cusp of that now. He's starting to become aware of Chucky. I, of course, remember it from my early days. I had my birthday parties there as a kid, so it's been quite a while. Chuck E. Cheese has been floating around. I know they've changed hands a few times. It's kind of one of those brands that keeps on changing hands, it seems like. But interesting nonetheless. Good old Chuck E. Cheese going for $1 billion, a cool $1 billion. And speaking of going, I think we're going to keep on going right on into our next segment, the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, the portion of the program where we break down the interesting and or the unusual, and sometimes just downright weird activity that's lighting up the old options ticker today. And because he's done so well on it the last couple of times, I'm going to try 3rd time's a charm. He'll either sink or swim this time for sure. I'm going to let Senior Andrew, Mr. Rock Lobster himself, take the lead and take us through the odd alleyway that is the Odd Block. So, Senior Andrew, what is first up on your radar of unusual activity?
The first stock on the radar is a name Ego, Eldorado Gold Corp. You know, they're your classic. We're going to have gold mines in Turkey, China, Greece, Brazil, and anywhere else we could find them. A bunch of the April 6 calls traded for April 6 calls for 85 cents. Usually trades around 20. So 3,500 calls traded, 2,600 normally trade. The open interest on here is 13,500 contracts. However, 18,500 contracts total traded on the day. And it looks mostly looking like paper buying.
Actually, it jumped up again towards the end of the day, nearly 30,000, 29,981.
Wow. Okay.
So it dropped another 10,000 after we wrote it up.
So I'm going to guess that was buying. A lot of it was lifting the offer, volatility higher. Somebody, I guess, that likes them even more. And it's funny because if you follow the odd block or unusual activity, there has been some scattered buying of these miners in pretty good size lately. Maybe, trying to catch a bounce in gold, but we'll have to see. But, the stock is basically at the bottom of the 52-week range. I think the low was like $5 or something like that. So, it's right at the bottom of the range. And they're going fairly, far out, but they need a little bit of a pop here in gold to make these things work out. So I think it's one to keep an eye on. I remember this happening in the summer of 2013 when we had that initial bounce and people came rushing into gold miners, saw a lot of buyers, and all these call buyers got crushed. So unless they were shorting stock against it, that was I think Eldorado at the EGO was around $12 at the time. So it's already done a 50% halfer. A stock split, essentially. It's a nice stock split. You get twice the amount of stock for the same money.
This is just options as delta written all over it here.
Yep.
This is definitely one to be filed in the to be watched column. This is some size. Someone putting on some size deltas here in Ego. Alex, close your ears. I know you hate whenever we talk about someone gobbling up 30,000 contracts on a $6 name. What did he pay? 80 cents for most of these? 85
cents on most of these contracts.
Wow. He paid a substantial portion of the value of that stock. Alex, this must really just drive you mad.
It drove him so mad he's speechless.
He threw his headset off in disgust. Alex, are you there?
Yeah.
Okay.
Yeah, I had to pick it up and rearrange my desk after.
See, I'm trying to incorporate you into the odd block, and that's the thanks I get.
Yeah, turning it over. $6 gold mining stock, I don't have a problem with playing it on the option side. It's the $2 stock that you buy the leap on, and you look at it and you go, why? That's the one I never understand.
We got one of those for you today, Alex.
Well, I won't understand it then.
I figured spending about 1/7 the value of the stock on a 4-month option would just deeply offend you.
It would cut to the quick. Yes, it would.
All right, Andrew, let's move on then before Alex bleeds out on us here.
I don't want him to implode. Okay. The next stop is Amarin Corp, a late-stage biopharmaceutical. Alex, the best call of the year so far 2 weeks ago was the surge in biotechnology. Crazy, crazy, crazy movement in some of these names. By the way, every biotechnology company with a drug will go up 300%, or so this paper was saying. So it's a relatively small amount of volume. 257 Jan 3 calls traded for a penny. Amarin's a $2.25 stock. Average daily volume is 10,000 on about 10,800 contracts, but the open interest was 24,600 contracts. Basically, this is somebody closing a short call position. They got the bottom for a penny. They're probably going to close a penny. Volatility in the name today was down 400 points, and I think by the end of the day it was down 600 points in Jan. Huge volatility collapse. Now, I know it's just a $2 stock, with 2 days to expiration, but still, it was a pretty huge volatility collapse in here. So whatever the biotechnology news is, Amarin Corp their treatment for cardiovascular disease somehow did not make it happen today. And all the dreams of these people died.
24,645 dreams sitting on that 3-strike, just withering away to nothing. This guy decided to take his penny and run, I guess.
Right. So I'm going to assume, since only about 3,000 were closed, the other 21,000 are sitting there, going bye-bye.
Yeah, they're asking their risk manager, let me do it again. Let me do it again next month. I swear it's going to pop next month.
Right. It's gonna happen next month. Everything's going to work next month.
Who's this guy who closes out for a penny? I love this guy.
For a penny, I think, I can't remember how expensive those calls were, but they had some value in them. But how about the guy that sold them for a penny that just gave up?
Yeah. Either way, that trade is just an interesting one to watch. So
I have a dumb question. The penny close, but do they go up on the tape?
I haven't seen a cabinet trade in a while.
So at some point we should talk about what a cabinet is. Not today, but
I was going to say we probably should explain that to the people. That's an old school term.
Well, I'm an old guy.
We'll put that in a strategy block or one of those other blocks down the road, Alex. We can dive into all of our old school minutia. Well, it looks like these 3,000 went up. They're on the tape here today, so they look like they at least the penny prints all go up, obviously.
Yeah, I think they printed a penny. Yeah, cabinet is just 1/100th of a cent essentially for a penny contract. Another stock. We'll do one more. Another biotechnology company, just because I can't help myself, INSM, Insmed. It was up $11 to $21.38 today. Listen to the price. Somebody paid $270 for the March 30 calls. Stock's $21. They paid $270 for 1,182 March 32 calls.
I think it was up yesterday, right? Because it's down about 50 cents today.
Yeah. Well, it was up at some point. I mean, it was up when I wrote it.
Intraday. Yeah, that's right. It closed a little lower. It got up to about 22.20, 22.30 intraday. Yeah.
As near as I could tell, this was a call buyer. They traded very high at the time. It felt, the paper felt like it was paying very close to the offer. If it was tied to stock, they got a good stock fill. But, I mean, volatility in this thing in March is 150%. So, again, another trader looking for, a huge move in this biotechnology stock. So, gosh knows where it lands. But let's see, this is lung infections. So it's a lung drug, some sort of lung drug.
All the money's in lungs these days. We all know
all the money, lungs and livers, lungs and livers.
Yeah, this is kind of stereotypical odd block paper. Someone loading up on way, way out of the money calls, spending a fair amount for him. $1.50 implied. That's some serious primo he's paying for 1,500 times on this strike with zero open interest. He's open it all here. Yeah, yep. This will go in the to be watched if for no other reason than to probably watch these things decay in his face. Who knows? Maybe he's on the tip. Even of course, we said this a million times on the show. Even if he does agree with this, there's so many better ways he could have put this on than just loading up on the 30s for $2.50.
Yeah, you could have bought the 20-30 spread for
for that same price. Almost that same, maybe a little more, but almost that same price. And you got a $10 vertical that looks a hell of a lot better than anything he's got going here. I know we beat this horse all the time, listeners, but this is a great example of size money not at all being the smart money.
They're just like, I'm going to buy these, and the stock's going to go to $50, and I'm going to make a fortune. And if the stock's going to 50, this is a fine purchase. I'll give him that.
Yes, that's true. If it goes to 50 or beyond, then maybe he's a genius. But beyond that, in any other scenario, 48, he's an idiot.
Yeah. So all I know is we need more people like this because it brings more listeners to the option block, and it brings more customers to Option Pit. Those are the refugees
we have a very selfish viewpoint here on the show. The more crazy nonsense that happens in the space, the more stuff there is for us to talk about, the more stuff there is for us to write up on the old website. Of course, if you want to read a lot more about these or any other alerts, we didn't have time to get to on the old odd block today, then surf on over to theoptionsinsider.com. Click on the unusual activity tab. Find the little unusual activity call out there on the homepage. A lot of great ways for you to find these write-ups and a heck of a lot more we don't have time to get into on the show, and even more detail on some of these that we do hit on. So by all means, surf on over to theoptionsinsider.com and check out the unusual activity tab for a lot more. And now we're going to keep on rolling right on into our next segment, the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, by now you know the drill. But for the handful of newcomers out there, the Xpress Block is the portion of the show where we get to peer behind the curtain into the mystical, indeed the mysterious land known as Options Express. And our tour guide on these ventures is none other than the Viceroy himself, wearing his jaunty cap and whistling a jaunty tune. Mr. Viceroy, what are our stops today on our behind-the-scenes tour into the land of OX?
Couple stops. Intel, we're waiting for earnings after the close. We saw a lot of volume today on both sides, ironically. We saw activity in the calls and activity in the puts. As we talked about earlier, Best Buy, they just beat it today. It was down out of the box. One of the home builders was active today, DR Horton. Lit up the phones a little bit today with call activity. But overall, the tone today was good. As I've mentioned many times, I sit between the futures desk and the options desks. Although the options desk extends well beyond me, the help desk. And everybody seemed to be on the phone a fair amount today. On Monday's show, I talked about the kind of stealth sell-off in energy, and we saw energy immediately come back after I talked about the stealth sell-off. But overall, the tone today was kind of meh. All day we were down all day, and market didn't really move much from where we opened. But activity was brisk. So kind of a mixed day.
Let's start off with Intel because, I have a soft spot in my heart for Intel. That was my old stomping grounds back when it was a hand-to-fist battle for spaces in all the newly listed equity pits out on the SIBO. I carved my way into the front of Intel. Had to sleep over at the freaking exchange to do that, by the way. Those are the good old days. Don't miss that. But yes, that was an interesting pit for quite a long time, and earnings was always a very, very fun time out there. I could regale you with some great stories of many, many interesting earnings. One time when they pre-announced and the thing was off about 25% overnight and came in the next morning and pretty much the rest of the floor was pretty dead. So we had a crowd around us watching us trade the entire day. We had a bunch of spectators essentially watching Intel sell off and people saying, "Oh, look at the crazy monkeys trying to sell bullets into this teeth of this aggressive sale." But yeah, also some good memories about Intel too. Just around earnings time, Intel of course closing today $26.54. The at-the-money straddle going off, the 26.5 straddle going out at about $1.05, $1.07. They're selling off today in the after hours about 85 cents. So wee bit of underperforming, but as I've learned many times, both to my chagrin and to my great joy in Intel, is that the initial show you're getting in the after hours reaction to earnings has nothing to do with what actually happens. I got some of my best, most memorable, ridiculous gamma scalp fills ever, just working crazy stub quotes around Intel around the earnings time. Sometimes you're like, I got filled where? So those were fun days where you could just work some crazy gamma scalps and have a good time. Andrew, in your litany of pits, did you ever spend any time at Intel? Maybe you never traded on the Amex, did you? They were pretty big on the Amex out there.
No, actually, no Amex trading. But yeah, I didn't trade Intel. Even if it was dual listed, I didn't trade it. So
you pretty much traded everything else on the planet but Intel.
400 different stocks in the SPX.
Yeah, this was a fun one. It got a little bit tiresome to trade towards the end, too, as you can imagine. Like a lot of large single-name equities. The skew was pretty pronounced out here, and the entire paper flow was all one-sided, selling calls, buy inputs all day long. So as a market maker, you knew what you were putting on every month way ahead of time. And it was a scramble to sell.
Giant roll.
Yes. It was a scramble to sell anything to the upside as soon as you could, and a scramble to buy anything on the downside as soon as you could, and you usually ended up losing that race. But it was interesting nonetheless, and a fun one to watch. And I don't play it as actively as I used to in the after hours. I haven't been trading that much lately, but always a fun one to keep an eye on here. Anything else, Mr. Alex, before we roll on out of the Xpress Block?
No. Intel, as I say, actually, I got that note handed to me while we were on the air already about the volume we had done in Intel. But no, it was, we were down out of the box. We were down the entire day, but activity was brisk. So, there was a lot of stuff to do. And overall, it was an okay day.
I'm sure the listeners are going to want to know, what brand of bubbly were you guys sipping all day over there in the OX HQ?
So we were not consuming alcohol, God forbid. Remember, Legal Day 1 was the first show I ever did, and they were cracking wine bottles in this place, and Jimmy Rouzan and I were locked in the room to get some sound deadening. No, today was just food. But, there's no free lunch on Wall Street. Today was free breakfast and lunch. So that was the cuisine of the day.
There you go. You guys just took a penny out of next quarter's earnings. I hope you're happy.
If anybody knows my size, it could be 3 cents out of the earnings just to feed me.
There we go. Let's keep rolling out of the Xpress Block then before Alex keeps knocking change off of those earnings, because it's time for my favorite part of the show. Don't tell Andrew, don't tell Alex. But this is really my favorite part of the show because it's your part of the show. It's, of course, time for the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, everybody, welcome to the mail block. I like to, whenever possible, turn Thursday's show into a little bit of a listener mail extravaganza, give you guys some time to sound off here on the old show. Monday, we like to do a little bit of strategy, but I know so many you guys are knocking it out of the park with comments and questions from all different formats, from the website, from social media, email, what have you. So I'm trying to make sure we get to as many of them as we possibly can. Here's a fun one that came up last week after last week's show, Andrew. Someone wrote in last week, actually, name is Shane Hamilton. He wrote in after our last episode and said, only on the option block does Andrew toss around words like bereft. The hashtag altered state. I thought that was pretty funny. So apparently he thinks you've been consuming some bubbly on the old show, Mr. Rock Lobster. All right. Next one up, we had some people sending in some. You can see how far behind I am with all the listener questions we get. I'm trying to catch up. You can see some people write in at the beginning of the year with some trading resolutions, New Year's options trading resolutions. One of them caught my eye. It was kind of funny. We had a trading resolution from Britt Dowd, and he wrote, "To finish building my foundation so that I can finally focus on trading options." So it's good to know he's got his priorities straight. He's got to finish putting a foundation on his house first before he can actually trade. That's probably a good thing. You want to have a place to actually sit and stand and do your business before you begin doing things like blasting out premium like Andrew loves to do. So yes, a good resolution. If you guys have any other resolutions you want to send in, we'll make fun of them on the air. Don't worry. All right, next up, we have actually a follow-up question from a recent listener mail we discussed on the show. This is a follow-up from Richard. And he actually writes, actually, let me read the other question first because his is in regard to a recent listener mail, and then we'll kind of get to that. Recently, you may remember we discussed this question from a listener who goes by the handle Jack. He wrote, "I know you guys are not tax advisors, and so nothing you say can be taken as certain in any answer to this question. I'm a small-time trader, and at the moment I cannot afford a CPA with trading expertise and options to do my taxes. So I'm wondering if you can talk about the potential tax consequences of front spreads, aka ratio spreads, listeners, especially when used as covered call replacements. I've had good success with this strategy. I'd like to move it into my margin account this year instead of just using it in the IRA to avoid the tax headache." All right, so that's the question. We discussed that last time. Then we had a follow-up question on that from Richard, and Richard writes, regarding Jack's question, would these have to be put-based front spreads since you'll ultimately have net uncovered short positions? I didn't think naked calls, as you would have in a front spread, would be eligible for use in retirement accounts. Thanks, Richard. He brings up a good point. We kind of touched on this a little bit last episode, but of course, when you're talking about covered calls, the reason that that's covered is because you're not net short any units. You have any long units in the underlying, those are covered by the call. You're net flat. There's no net shorts hanging out there. On a ratio spread, obviously you are net short units. You're buying one, you're selling two, you're buying one, you're selling three. Depending on what ratio you're doing, you could have some extremely short units on that, and so that typically would not qualify for a retirement account. And even if, as Jack says, even if you did it the other way, if you did a put front spread, so of course a ratio put spread where you're buying one, selling two, and getting long to the downside, it would have to be, I would imagine at the very least, a cash secured to do that in an IRA. So you're still tying up a lot of capital. You're going to buy one, sell three, for example. You got to have the cash in your IRA to buy those two extra puts. To buy those two extra puts worth of stock, if that indeed does come to pass, if you're going to do those in your IRA. Is that your take as well, Mr. Alex, that if you're going to do puts, front spreads, they got to pretty much be cash secured, right, in an IRA?
Yeah, the net short has got to be cash secured, and there's no ifs, ands, buts, or maybes, because you can't make that mistake in an IRA where you go debit for a moment because it's an ugly tax consequence. Investors can regulatory shop brokerage houses, and they can probably find places that would let them do things that we here would not allow, Schwab would not allow, and that I think no sane person should do. Doesn't mean you can't find a house that will let you do it. Just be aware of the fact that in an IRA, if you actually do go debit, it's just a nightmare. So you don't want to put yourself in a position that isn't cash secured. And obviously, it's got to be on the put side, as the listener pointed out. On the call side, you'd have a floating requirement. You might find a house that would let you do it with an enormous amount of cash, maybe 5 or 6 or 10 times the strike in cash. But you want to be especially cautious in an IRA. But I also want to give listeners an additional, I know I'm Dr. Downer occasionally on the show. 1099s are coming out this year, and they will have options on them for the first time. Although some firms have had them there. So you don't want to assume the IRS is stupid and can't figure it out. You want to be upfront and straight with the IRS. And I know I've said this before, but I'll say it again. Don't assume that options are, quote unquote, so sophisticated that no one at the IRS will understand them. The IRS has an option center. They actually have a group of people who are trained to do and review taxes on options, and they're very savvy. So just be aware of that.
I think all of us probably still take issue with the underlying premise of ratio spreads as some sort of alternative or equivalent to a covered call, because as we've said already many times, they're not equivalent. You're net short units on the ratio spread. You're not net short units on a covered call. So I don't know why our friend here, Jack, is seeing them as kind of equivalent. If you do a straight up vertical, then you can make a better argument because there's no real net short units there. But covered call versus a ratio 1x2 or 1x3 call spread, I don't really see them as the same thing. Andrew, do you view a front spread and a covered call as equivalent positions?
A front spread and a covered no. No.
There you have it.
No. The answer to that is no. Remember, listeners, the biggest thing about risk control and options is net contracts. And for all of you that don't know, you think of a long stock position as a long call, short put. For terms of counting your contracts. In the old days, we used to do little cards and count up all our contracts by hand when you had like 3,000 positions or strikes. So if you buy stock and sell a call, all you do is you take the call you're long that's in the synthetic call in the stock, and you're writing your call against that, which leaves you with a net short put. So the idea is once you sell 2 calls against stock, though, then you have a short straddle, right? Short call and a short put is a short straddle. So very different positions, and just always remember to count up your contracts, understand your synthetics, and you will not run into these nasty problems when the stock blows up.
So good follow-up there, Richard. Jack, we're still not really sold on your initial premise. So if it's working for you, I guess it's all right, but I wouldn't really consider that to be a covered call replacement. That's a different beast entirely when you're getting into the ratio realm. Next up, we have another listener, someone who's been waiting for a while for an answer to his question. I apologize. Some of these things sometimes get lost amidst all the various shows that we do here. This is a question from Luke Davis. He writes, Mark, on show 302, which was a few episodes back now, you said in answer to a listener question that using a 6-month or 1-year leap was good for a stock replacement strategy. Is there any reason you wouldn't go further out than that? For example, I am currently using this on Microsoft and Ford, but with the Jan 2016 in the money calls. Keep up the informative and entertaining shows, and Happy New Year, Luke. Well, thank you for the Happy New Year, Luke, and sorry it took so long to get to your question. But, yeah, that's something I've talked about a few times on the show. I love that strategy. We talked before. Jack just wrote in about covered call equivalent positions, and I've always said many times, if you're going to do the covered call, swap out. I much prefer, instead of the ratio spread or whatever he's doing, to just swap out the underlying with an in-the-money call. And then you have all the efficiencies you talked about before on the show, the capital efficiency. You have Delta in your favor to the downside. You have Vega working for you on the downside. All the great things that options bring to the table that stock simply doesn't have. So, yes, I'm a big fan of doing that, swapping in the in-the-money call. I pick 6 months or maybe a year. It's kind of an arbitrary period. The reason I keep going back to 6 months is there's been some interesting studies on that. I think I've mentioned on the show a few times before. Our friends at the OIC have done a lot of studies on that. They focused it on the long put side, but it's the same analysis because they're looking at collars and they're trying to find the optimal way to construct that collar. Of course, a collar being a long put and a short call. Short call is easy. You got to maximize that decay. You got to get as close to expiration as possible. The long put side, you have a lot more choices out there. And so they've analyzed looking at near term. Of course, you're paying a lot of decay there. They've analyzed looking at long term, a couple of years out. You're paying a lot of extra time premium there that you may or may not need. And they found in their analysis, and it's kind of been borne out in some other studies and just in anecdotally and things I've traded as well, that 6 months seems to be a pretty decent time frame where you're not just paying nothing but theta. You're not paying through the nose for time premium. And then also, remember, some of these positions, you may want to adjust them over time. And so if you're loading up on a call that has a ton of extrinsic value, and then you're going to have to roll that again later down the road, you may be better off keeping it in that 6 month to 1 year time frame, just for a little bit more nimbleness there. You can roll a little bit more easily. You're not tying up so much capital in this call position 2 years out when maybe you really only have a 6 month window, and then you want to adjust after that point. So it works. I'm not saying you can't do it. Like you said, you're doing it on Ford and Microsoft with the Jan 2016. If that's working for you, hey, by all means, keep going. Ford's not a bad example. It's a little bit cheaper stock. You're not going to incur too much time premium where it's going to be unmanageable. It's not like you're doing it in an Apple or a Google where you're going to be choking on time premium. But still, if you can do a little bit shorter time horizon, you'll save yourself a little bit of capital. Remember, the name of the game is also capital efficiency at the end of the day. You can put that towards other trades, and then in 6 months or so, when it comes time to adjust, you can take a fresh look. Maybe Ford's rallied a few handles, and now this meaty call that you bought 2 years out is kind of irrelevant, and you want to maybe adjust that a little bit. So there's other ways you could do it. I've just found for myself and from all the studies I've looked at, optimal time period seems to be around 6 months. Alex, Andrew, you guys take issue with that, or you like the 6 month time frame as well?
I don't take issue with it, but I'll add one kind of funky wrinkle to this. To your point, Mark, going real long, you lose a lot of flexibility. I've talked about the client that I used to call on who only bought long dated and had phenomenal performance. But I will give you one wrinkle where I would go into a longer dated option. And I know I'm going to get mail on this. If I thought short-term rates were going to go up and the market wasn't going to go down. So I thought the 2-year rate was going to pop. Then the 2-year call would actually benefit from a pop in rates if the stock didn't get hit. So the call would have a little bit of an afterburner in it. The challenge when you go out very long, as you've pointed out, Mark, is A, you lose flexibility, but B, the longer you go, the less important volatility is. Carry becomes much more of an important component of the option. Now, if you go into an options pricing model, you'll see that the vega of the long dated is large. So some of you are going to say, well, how can he say volatility is not an important component? Think of the vega as a percentage of the premium. And if you go out to the longer dated stuff, it's actually quite small. And let's do a hypothetical. Let's say the 2-year rate goes from 1/4 to 3, but Microsoft doesn't decline because the 2-year rate goes up. Then that long dated would benefit from the carry going from 1/4 to 3. And if Microsoft went up, you'd have an afterburner in performance.
Did you dare to bring up Roe on my show there, Mr. Alex?
If I did, I didn't mean to.
Of course, you're right. Interest rate sensitivity being one of the few reasons you may actually want to go out that far. It hasn't really been a factor for the better part of the last half a decade or so.
Yeah,
but of course,
for our lifetimes.
Yeah, exactly. But on the horizon, that may indeed change. So if you do have a sharp viewpoint on near-term rates and longer-term rates, then 2 years out may be a viable prospect for you. Mr. Andrew, do you ever play out in those deep, deep waters?
I like the 6-month. I like the 6-month with time spread attached. Like put time spread as a stock replacement because it gives you a little bit of jazz if the market tanks. Of course, you'll be learning about that in our bear market trading strategies. But yes, in general, it's a good alternative, and it also frees up lots of capital for the Delta.
Gotta love that capital efficiency. Speaking of efficiency, that's all the time we have on this show. I like to squeeze in as many listener questions as possible on Thursday, and we went right down to the wire. If you have any more questions, don't worry, we'll get to them next week. If you want to join your fellow listeners on the show, a lot of great ways for you guys to do. You guys are taking advantage of all the platforms. A lot of great comments coming in from the website, of course, theoptionsinsider.com. Post a comment on the show notes there. Twitter.com/options. A lot of you guys love that. Facebook.com/theoptionsinsider. More of you guys coming through that way. And, of course, the old-fashioned way, questions at theoptionsinsider.com. A lot of great ways for you guys to stay in touch and get your voices heard on the old mail block segment. Unfortunately, like I said, that's all the time we have for this episode of the Option Block. But before we go, really quick, let me check in with each of my cohorts, my partners in crime here, to see what they have cooking in their respective necks of the woods. Starting off with you, Mr. Lobster. What's cooking in the land of the pit?
The biggest kettle of fish we have to fry is January 25th, Saturday, Bear Market Trading Strategies webinar with Mark and myself, and discussing basically those types of things where by just adding low cost, usually theta positive type trades to a long position, it can improve it basically gives you a move in a market that's going south. And it helps a lot with, keeping helps a lot with preserving capital, essentially. Keeping the capital going.
All right. And last but certainly not least, Mr. Jacobson, a.k.a. the Viceroy. What's cooking in the land of OX?
So as you mentioned, we're off Monday, Tuesday, couple webinars. Nina's going to do long calls. I'm going to do the Idea Hub. Wednesday, Dan Gramza from the CME is going to do futures trend trading. Idea Hub moving to Schwab Mobile in the next couple months. We're very excited about that because the base is different. We're $7, $8, $9, $10 billion here. They're $2 trillion in assets managed. So moving the needle a little on that base would be exciting. Other than that, 3-day weekend. Everybody have a safe, long holiday weekend.
And on behalf of the Viceroy and the Rock Lobster, and of course myself, I want to thank all of you guys out there in the listening audience for downloading and streaming and subscribing and for sending in such great questions. Keep it up. You guys are really knocking it out of the park. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.